Hello people, welcome once again to Ken's Money Matters. As promised, I'm back with money market funds in Kenya. This video is going to be very informative because a lot of people are trying to invest now. They are trying to find the best investment vehicles that they can use effectively and efficiently, and it should be simple. And one of the most simplest ways you can start your investment journey is through the money market funds. So for my funds in Kenya, this video is for you, and there's gonna be another video that talks about the top money market funds in Kenya that you can start investing with today. So when we talk about money market funds, what do we actually mean? I think I've described this before, but what we're saying is basically it's a type of a unit trust whereby investors pool their money together, and then it is managed by a professional fund manager who invests that money in a particular securities or equities and stuff like that to give a particular returns. But when we're talking about money market funds specifically, it's basically short-term investment in short-term debt securities such as treasury bills, commercial papers, and so on and so forth. So basically, it's just short-term investment in these kind of debt securities. So basically, they take your money, they invest it in some short-term loan somewhere. The government, for example, has some bonds or treasury bills or some commercial papers that they can purchase with that money and then try and achieve certain returns that they give back to the investor. So money market funds is very good, it's very sustainable, it's liquid, it's for those who do not want to take so much risk in equities because it's basically risk-free. So those who do not have high tolerance for risk, this is the best place to be, money market funds. So for those who are looking for something liquid, something stable, something with low capital, something with much less risk, this is the place to be. Money market funds in Kenya are thriving now. If you look at the latest reports, they have beaten the bank deposits by far. And I always tell people the banks are making you poor. Forget about the banks. Focus on money market funds if you want to get some short-term returns and avoid risk. And this can help you in so many ways. Money market funds can help with any kind of savings that you have for short-term goals, any kind of savings you have for medium-term goals, or any money that you're yet to invest in a long-term vehicle. So for example, you have some money, you're planning to buy a car, you're planning to buy a TV, you're planning to buy, something in the house, and you still haven't saved enough money yet. You can put it in the money market fund, let it gain interest, let the money work for you as you try and get more money. And this way, the money that you already have is working for you to bring in more. So any short-term purchases, emergency funds that you have, I always tell people to have emergency funds, the money should be in a money market fund. That's what I advise people. So for short-term goals, this is the place to put your money instead of putting it in a bank where you're going to get very low interest rates, and sometimes they even charge you to keep that money. So guys, the first one, I'm going to look at some of the things that you need to look at, some of the factors you need to consider when you are choosing a money market fund. Number one factor that you have to consider when choosing a money market fund is the interest rate. Of course, it's about making money. Of course, you want to make more money out of your money. So if one person is giving you 5% annually and the other person is giving you 10%, of course, you're going to go with 10%. But you have to consider the interest rate or the yield of the money market fund you're going to go with, or the fund you're going to go with. So make sure you know the interest rate and you compare in the market. Another thing or another point to consider is sometimes if the interest rate is too high compared to the other peers in the market, be very careful because that particular fund may be pursuing very aggressive investments that may have certain risks that are not obviously open to you as an investor. So do your research, make sure that it's not something that's a scam. It should always be an average of the market. Let it not be too high. So for example, if one person or most people in the market or the most funds are giving you 7% and one is giving you 14-15%, you have to probe deeper why the other one is giving 15%. You have to look at the investments they're taking and what is their strategy in terms of investing. So that's number one. Number two, withdrawal limitations. You have to ensure that you can get your money when you want it. I know that a lot of them, you have your money anytime you want it. You can sell your units and just get your money pop on the dot. Because this money is not meant for long-term purposes. Most of the time, people want liquidity with this money, they want stability with this money, and they want assurance, and they want access to this money. So if you want access to your money, make sure you're looking at the withdrawal limits. Make sure that you know that the fund you're choosing will allow you to withdraw money at what intervals, because all of them have different rules, all of them have different conditions and terms. Therefore, be sure which conditions you're agreeing to and how quickly can you take your money when you need it. Number 3, very important, look at the fees charged by the fund. This is very important. The fees always eat into your investments. It eats into your principal or whatever your interest that you will have earned. So fees are extremely important. So a particular fund may be giving you very good interest rates on your investment, but when you look at the kind of fees you're paying, you end up losing money, or you end up being the same with other funds you may have used before. So you know what? Look at the fees you're paying. Fees always accumulate, and despite the differences, even if it's a small difference with other funds, that difference becomes very big over time, because most of the time you're going to be investing for a long time. You're going to be using the money market fund for a while. So make sure that you're paying as little fees as possible, as reasonable fees as possible. So be keen. Point number 4, what you need to look for is stability and risk management. So you have to look at the history of the fund you're going into. You have to be sure that they're a stable one, they have a very stable history, they have a clear history, they can prove it, and it's out there in the open, in the public. So make sure you're not just going to some fund that you don't even know anything about. Have some history about it, have some information about it, have some knowledge about the fund you're going to. And of course, you need to know their strategy, and like I said earlier, the risks that they take. Most of them are usually safe. Most money market funds are quite safe because they invest in very safe securities, debt securities. But you have to be sure that they are sticking within that strategy, because you never know about a fund. All these funds have different managers. They pursue different strategies. They pursue different risk levels. So make sure you know the risk level of a particular fund that you're going to choose. And number five, the minimum balance you have to invest. All the money market funds or all the funds have their own terms and conditions based on what they are pursuing, the kind of investments they have. So make sure you know that how much can you invest in that fund particularly. Some will tell you you must invest a minimum of 50,000 Kenya shillings. Some will go up to 100,000 Kenya shillings. Some will be like you can invest whatever you want. For example, Saiton, I think you can invest as low as you want, as low as 50 shillings. So make sure you know the minimum investment before you choose a particular fund so that you can start as soon as possible. The last one is basically withdrawal terms. Like I said, I talked about withdrawal limitation on the limits. And now this is the withdrawal terms. So some of them may tell you they need a notice to withdraw your money. They need 2, 3, 4, 5, 6 days notice. Make sure you have these terms, and if it works with you, if you have some emergency money somewhere else, then you can invest in something that requires notice. But if you need the money immediately, you want to be using the money all the time as you go, then you need something that's more liquid and more available. Then make sure that you check that out and you know these terms before you get into any transaction with these people. So always ensure that you're very careful, you're keen, and you know all the stuff that I've just talked about. These are some of the factors you need to consider when you're going to choose a fund to invest your money. So be careful. Anyway, I'm going to do another video on the top money market funds in Kenya, and it's gonna be boom.